Today I'm going to be showing you a Forex trading tip that has allowed me recently, as seen in this image, to make $16 a day trading Forex relatively passively. This is perfect for swing traders, and if you've ever heard of a swap payment that you've had to pay to your broker, I'm going to show you how to turn it all around and actually get paid just to trade Forex on a daily basis every single day. Let's jump in. All right, guys, now we're taking a look at a chart here, and I want to break down for you how I'm actually able to make that $16 a day. Now, this is not, like I said, it's not magic and it's not free money. There's no such thing in Forex, but I am going to show you how you can align yourself in particular trades that are actually going to net you a positive daily payment, or in this case, swap. And this is what we're going to need to understand in order to make money in this way. Remember how sometimes you've noticed maybe in your history on your MT4 brokerage account or something like that, or your MT4 app, in the history section, sometimes you can see a swap payment that you've made to your broker. And maybe possibly as well, you've even seen a swap credit that you've received. Well, swap, all it has to do, it is basically the reflection of interest. Okay, now if you've ever stuck your money in the bank, then you know that banks offer interest, and so do central banks around the world. And when we're trading currencies, there is actually a way to be paid positive interest every single day of the week. How do we do that? Well, we have to identify currencies that offer good interest, and we have to trade them against countries or currencies that have low interest. And again, that little spread, that's where we're gonna get paid each and every day like you saw in those orders. Now, in these screenshots that you saw previously, and we'll pull them up again, CAD Yen is a trade that I'm in long right now. And if we take a look at CAD-JPY, so I've been in a buy trade on CAD Yen recently, and this chart has been going up, which has been great for my position. But on top of my position actually moving in my favor, we've also been able to collect positive swaps. Let's break down why this actually is. If we take a look at Canada versus the Japanese yen, this is where our spread is going to come in, where we're actually able to make profit just for holding this each day. At 5 p.m. US Eastern, my brokerage offers a swap rollover payment or deduction from my account based on what I'm holding. If I'm holding CAD Yen, I'm going to be paid a positive credit. Why is that? I'm going to break that down in just a second. But if I sold CAD Yen, I would actually be selling the Canadian dollar and buying the Japanese yen, which would result in a negative swap. So how do we find a positive swap? Well, let's look at this. Canada right now offers 2.5% interest from their central bank. The Bank of Canada has their rate at 2.5%. Meanwhile, Japan has it set at negative 0.1%. Okay? So if we took the difference, obviously there's a difference here, right? The Canadian dollar offers a whole lot more interest than the Japanese yen, or the Japanese central bank. So why does that matter? Well, this spread is where we're going to be able to be paid a positive swap. Now, again, the reason is because I'm buying this currency and I'm actually shorting this currency. The net result is a higher interest here, lower interest here. I'm buying this, I'm selling this. And finally, that's left me with a positive hold rate of 2.6%, because we're just going to take the net of these two, right? So by holding this position, of course, I'm taking a trade as I would normally, but now I'm only going to take trades in the direction of positive swap, so that each day I actually get paid something into my account, like those screenshots that you saw earlier. But this is not the only pair that I can do this on. Especially with the 2020 global pandemic, we saw interest rates go across the world down pretty tremendously. But now, years later, we are seeing the markets recover, and we're seeing interest rates actually going back up as central banks look to combat inflation. What does that leave us? It leaves us what we're talking about today, which is the carry trade, right? And the carry trade, all it is looking for opportunities like this and trading in the direction of something that's going to pay us a positive swap. For example, CAD yen, but there are many that we could actually look at. In fact, let's pull up some examples here. I'll take a look at the most commonly traded currency pair in the whole world. We'll look at Euro USD. And if we look at Euro USD and we look at the central bank's interest rates, you can see it's the same thing here comparing the Euro area and the US dollar. So from the central banks in Europe or the European Central Bank, we have 0.5%, whereas in the US, we have 2.5%. That means that we're going to want to be short biased here because in that case, we can sell the euro, which offers 0.5%, and we can buy the US dollar, which is offering 2.5%. So in theory, on our broker, we should get paid a positive swap to hold on to this and to make money over time. Now, I have to be fully transparent with this. You need to find a broker, if you haven't already got one, that will actually pay you positive swaps. Some brokerages will not do, their swap agreements are weird. Find a brokerage that makes sure that you actually get paid a positive swap if there is one to be paid. You can usually search up with your brokerage what swap rates are for that particular brokerage, and you can play around with how they calculate them and how much you're going to get paid for holding a position. Now, another transparency thing is it's not a whole lot of money for small accounts. It's not going to be like a $16 profit every day on a small position. Remember, my CAD yen trade that I showed you, I have several lots open. So yes, it's $16, but it's on several lots at the same time. But when we start calculating this out, I want to show you something. So let's say that I made, like I said, on average about $16 a day from my carry trade on the CAD yen. If I was to do that and hold it for the entirety of the year, I would make $5,840, which is a lot of money just in bonuses from trading Forex. It's almost like getting a dividend, except because we're using leverage, we're able to leverage that up and actually make a substantial amount in payments from this interest collection or carry trade opportunity. Now, again, there are risks involved because you're going to have to take a trade and you're going to have to put risk on the table and your trade could go wrong. But again, if you have a trading strategy where you're already trading something anyways, you might as well consider, are there pairs that I could trade that will offer me a positive swap? Now, again, going back to our CAD yen trade, we can't short this because if we were to short it, we would actually pay that same amount, if not more, depending on brokerages, what they do with their swap rates. You'd end up paying a lot of money for that difference in interest rates. Now, what you can usually do is if you have the Edge Finder, which is our market scanner, this is how I find the best currency pairs for trading the carry trade. I'll look for high rated interest rate pairs or currencies like the dollar right now, and I'll trade them against low yielding currencies like the euro, the yen, and the Swiss franc. Those are all numbers that are set to change though as central banks decide on their monetary policy. So you need to be prepared for changes in that, and that's why we have this data constantly brought in from central banks, etc., so that we can see what's going on next. Another great currency pair, for example, is Euro NZD. Of course, it doesn't have much of a trading bias for us right now. But if we take a look at the interest rate differential, look at this. We have 3% being offered from New Zealand. Meanwhile, only 0.5% from Europe. So we could collect a pretty good swap just shorting the euro and buying the Kiwi dollar. Now, of course, you don't probably want to do that unless you actually have a bias. So this carry trade idea, like I said, the way to actually really benefit from it is to trade it in combination with your usual trading strategy. If you have something that is working really well for you, might as well do that and also consider the interest rates that are going into these currencies so you can potentially make profit from both the trade itself as well as the carry trade. Now, I want to show you something really important here. The carry trade is going to have some days where it pays, some days where it doesn't pay at all, and some days where it actually does a triple payment on most brokerages. Let me show you how this is going to work. So here's how we're going to do it. Okay, we're going to go here, 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 and this is all going to make sense in just a second. So what we're looking at here is a day of the week. So if we go, this is Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and we'll say Sundays here, okay? This is how we're going to get paid our swaps or our carry trade interest payments. On Monday, we get a one time. So let's say it's $16. On Tuesday, we're also going to get one time. On Wednesday, though, we're going to get a triple payment. And this is how most brokerages or many brokerages offer their swaps. They actually do this where, okay, you get a triple swap on Wednesdays, and this is going to account for the weekend days, which I'll show you in just a second. On Thursday and Friday, we also get one times our interest rate payment. On top of that, if we look at this on Saturday, we're gonna get 0, and on Sunday, we're gonna get 0. So we don't get paid on Saturday and Sunday, but it makes up for it from this window right here on Wednesday, which actually makes, for me on my brokerage, Oanda, Wednesdays are very, very interesting to me because I'm usually going to be looking to jump into trades that I can capitalize on triple swap payment days. And this is, again, how you're gonna see those bigger numbers sporadically. If we show that window one more time with the day-by-day breakdown of my interest payments, you can see that one day sticks out much bigger than the rest. And the reason is because that was done on a Wednesday, and holding that trade on a Wednesday, at that holding point, I was able to collect triple payments. So based on this, if we know that Wednesdays are the best days for swaps, oftentimes Wednesdays and Tuesdays, these days right here, are usually where I'm looking to get into new trades that I like the idea of getting into. And usually I'm trying to align myself with positive swap paying vehicles. So for example, maybe on Tuesday and Wednesday, I'm looking at pairs like Euro New Zealand, and I'm looking potentially to go short. Or maybe I'm looking at UJ, which also pays a positive swap, but I'm looking to go long, right? I'm looking at the particular currency pairs. I'm saying, is there anything here? If there is, I'll take a trade with the expectation that, I want the trade to succeed by itself. I'll put my stop loss order in case I'm wrong, etc. But if I'm right, I'll make money on the trade, but I'll also collect positive swap from the carry trade idea that we're laying out here. And again, a couple positives and negatives about the carry trade. Positives are that you're going to get paid theoretically while doing what you're doing anyways as a currency trader. The other pro about the carry trade is that there's nothing very brilliant to it. All you're doing is holding on to a trade going into the end of a day. And of course, that's going to net you a positive gain, which is a nice juicy bonus on top of your already trading profits that you're hopefully collecting. The cons, though, are that it's not going to be big payments. You're not going to make $100 off of a $15 trade, right? It's going to be a really, really small amount of profit that you're going to collect in interest. But even if it's small, over time, it can stack and contribute to helping you build your trading account. So to me, it's worth doing, even on all levels of trading account sizes. Regardless, that's how I trade the carry trade. If that's something that you're interested in, then make sure to hit the thumbs up button and subscribe. I'll be talking more about this in future videos. And remember, if you would like to see this tool again, this is how I find the carry trade opportunities that I do best with. I can scan the interest rates being offered, and that's going to be a quick guide to which pairs I'd like to trade. You can find this and more tools down below in the description. Use that promo code and you'll get a discount off of it down below. Thanks very much for watching, and see you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.